Hello, everyone. Welcome to KatKast, the podcast where governance meets growth. So, I'm Catherine, founder of Katashe Solutions and Secretary General at Access. So, over the past decade, I've worked across finance, technology, and mission driven ecosystems, helping scale startups across APAC, building for public goods. So, KatKast is where we explore real mechanics of innovation, from governance to staking policy to financial inclusion and the future of public goods. So if you care about how systems scale and who they serve, you're in the right place. So today I am joined by Jacqueline, fellow Access member, and someone who operates at the crossroads of institutional finance and digital asset strategy. So I'm excited to have Jacqueline on, and I'll let Jacqueline do her intro and get into the conversation because this conversation can't be more timely. Yeah.
Hi, thank you, Catherine. Thanks for inviting me today. You are right, it's a very timely conversation. So for the purpose of today, I'm going to introduce myself and my experience specifically in Treasury and governance. So not everything. I've been around a while. So broadly, I've been in different countries, in government departments, financial treasuries, corporate treasury, and also non-profit charities. So I started in bank treasury in 1980. This was the payments processing side of merchant, and that was allowed after the first FCOS nationwide. And then I got thereafter seconded into New Zealand government treasury in divisions. The first one was in Crown Monetary Advisory during industry and Clark's time that looked at investment in Crown assets. Then also in the Treasury Economic Infrastructure Unit, looking at the support of public sector financial management with validated forecasting and correcting stress and policy procedures. For a little bit also into New Zealand, look at their financial. And then for a bit in Australia in investment banking and institutional investment management, looked at I did a lot of rulemaking underwriting in privatizing critical infrastructure, so public-private, in infrastructure transfer. And for the bank, the capital management, we looked at developing hybrid market financial instruments. So securitizing the left and the bank's balance sheet. At the same time, instead of pension client, we had restrictions on what they could invest in. We looked at that time, developed what has now been known as bonds and income principles protected programs that was structured that was possible for pension funds investors on a particular basis. And then I'll fast forward 10 or 12 years where I was based in Europe with the European Fund, 2000 onwards to 2014. So initially the Netherlands and the US. I helped several roles. The banks, they really structured trades, optimized.
Oops. Oh, I think, Jacqueline, you may have gotten disconnected. One moment. Okay. Hi, Jacqueline.
Hi.
There was a bit of disconnection, but now the connection's even better.
Okay, that's great. So I'll just guess where we got cut off. When
you were in the Netherlands.
Yes. So in 2024 in Europe and in America, New York. So in the Netherlands, we're still at home. One of the main is doing structured trades to optimize the bank's capital. So that's the front office dealing part at the Treasury. And then I got promoted to PA for the bank. So in that role, one governance function was to oversee corporate institutional investment and complex portfolio, i.e. balance sheet, corporate financing, capital market structured finance, underwriting, communication. So a signatory co-signing with the C-suite level. And in that time, got to work on task forces, looking at recapitalizing Tier 1 and Tier 2 of the banks, with capital, with as rules. And also on behalf of corporate clients, I was working in the Bank Innovation Task Force. This is before fintech became very popular a thing. So we were looking at securitizing a new collateralized product and tokenizing that with blockchain, so that it's similar to what Haven's Meta were doing in their absolute proof ideology for security before Satoshi famously has Bitcoin wiped out. And then I'll fast forward again a little bit. I went back to Australia in 2015, 2014 for family reasons. During that period, in Singapore, 2014-2018, the day job I headed up an investment management firm for a listed company and a private holding company, launched an investment platform, private market, tech index, Thomson Reuters. But the interesting thing is I volunteer work with with the Healthcare Foundation. That's where I help them worked with them on monetizing intangibles with their R&D programs for drug development. And drug development in oncology is $4 billion. It takes 15 years. So the idea was, on the Treasury side, how can we increase accountability and yield in the donor dollars? We looked at tokenizing certain investments made with the donor dollars. In 2019 to date, I've been based in Singapore. I'll just summarize that whole period as basically I've been positioned in executive management, CEO, CIO, board director, with license entities or entities wanting to get licensed in Singapore, whose shareholders are held overseas by corporates or institutions are licensed overseas. And I was licensed in the third before. So previously I was RMO exchange, licensed in MAS, but also had broker-dealer license and custody license. And that exchange was built on blockchain, and it's in the private bank space. We also look at tokenizing certain aspects. But I was caught up in the flood during the buyout. And was recently up until the time I was shareholders informed that they would cease in Singapore. I was CEO of an entity that has been operating since January 2020 for under the exemption as lodged with MAS. So that's not an overview. On the governance side, very broadly been involved as a non-executive director in listed companies across the tech, transition energy, and also looking at board level audit and risk committees for profit organizations and for non-profits and health sectors. So my interest in treasury and governance seems to be pervasive.
Oh, no, thanks for sharing, Jacqueline. It's you've worked all over the world, really, like different jurisdictions across Asia and Europe and US and Australia. And then coming back to Asia again. So which is great, right? Because we do need more governance talent, whether it's in Web2 or Web3 domains. And that's why, going back to the timeliness of the conversation, when we have a lot of innovation happening both in digital assets and in AI too, it's important we think about how we can integrate these into existing governance frameworks and how we can keep um, the end users safe. So that's why,
Absolutely.
yeah, when it comes to that's why when I felt that there's the connection there, because when you joined Access, first thing I was like, she's a woman, so we need more women in tech. That's another, and then
I haven't been as successful a founder as you have,
no,
Catherine.
no. we're all yeah, flourishing in our own ways. And when it came to governance work, right? Because
Yes.
both of us are in the Access Crypto Treasury working group.
Yes.
You offered to help contribute your thoughts, and I really appreciate that. So we really I really wanted to get this industry as a collective to think about how we can drive best in class governance standards for digital asset treasuries. So that's why the access investment policy statement was circulated to members, and I would really love to, the dream is to see it move from paper to practice. So
I
we have
heard
a
it's been approved,
policy
so
in action.
congratulations, Catherine.
Sorry.
I've heard it's been approved. Yes.
Yes, and
Okay.
thank you for being part of that governance governance exercise, because we had the AGM which you attended, and
Mm.
there was a vote. There was a motion to expand the allocation of digital assets from just Bitcoin and ETH to also other digital assets, and also to expand it to staking activities and not just holding it in reserve. So these are all very exciting developments.
Yes.
Yeah, and also just to move up to a more macro type of moment, let's look at what the industry is doing, right? Like strategy, also formerly known as MicroStrategy, they have like adopted a digital asset treasury approach where Bitcoin is their primary reserve assets, right? So it then sparked a flurry of follow-on activity with Metaplanet in Japan and Mara Holdings doubling down, and even now we have sovereign level conversations about strategic Bitcoin reserves happening at the government level, like in the US, for example. And at the same time, Ripple acquired G Treasury to
Yes.
build what they think would be the world's first unified traditional and digital assets treasury platform. So there's a lot of ambition, and the infra's kind of catching up alongside with the governance. So how do you see this like adoption curve happening? What do you think that where's the institutional thinking heading with all these developments?
Yeah.
Yeah.
So I wanted to spend a bit of time articulating that treasury consideration and the parameters in which treasuries function are slightly vary depending on the type of entity and the family of law it operates in, right? So a bank would have certain criteria for their treasury needs, and a pension fund, corporate, and then obviously technology companies, right? They have like a strategy. I think they give them one strategy. Yeah. So I think with companies like strategy, they have a lot more latitude and flexibility to have a broader spectrum of digital assets in their treasury. For the more established entities, it becomes slightly more challenging because the whole documentation and the risk management capabilities are centered very differently. So there are legacy issues, there are legacy considerations to how we look at right sizing or right theming the treasury basket. Right. And it doesn't happen overnight. And if we look at objectives of treasury, it's really in liquidity. It's to optimize on the capital structure so that valuation, you get the best possible valuation. It's reducing volatility in externalities like FX, example, interest rate volatility, and then it's also a key function with cash management as well as liquidity management. So if you take the example of deploying, I have no issues with product and right? Bitcoin's down, and it was very carefully, formulated, launched very tight during the GFC, because I was aware, and I totally get why it came to exist. I was very new. However, if you look at how Bitcoin has been performing, it's risk, and if we talk about market, it makes the balance sheet very volatile, right? So most traders tend to look at just as an instrument. So as a basket of treasury portfolio, how the Bitcoin currencies feature it as a diversification strategy to reduce volatility and, if possible, increase yield, right? So those are more considerations. So it's actually very clever for people to come in, to try and vertically integrate the workflow stream, right through the custody. Yeah, it does create certain issues in risk centralization, but it also solves quite a few considerations where you have technology gaps or mismatch.
Yeah, thanks for sharing. And it is true that a treasury is supposed to be stable, right? It's not meant to be volatile per se, and alternative assets like Bitcoin and Ethereum tend to be, as you said, more on the volatile
At the
side.
moment, because it's still in development.
Yeah, and it's still very early days for maturity.
Correct.
Although Bitcoin does they call it like the representation of a digital gold
Yes.
thesis, although it's decoupled from it doesn't
The
seem to be.
volatility is due to the current state. So it's young. It's a very young movement. And so hence the volatility, because they're like financial market knee-jerk reactions, right? So the effect of the changes at the moment is seen more acutely. But I'm sure there's going to be actually nothing I say is financial advice, no prediction, no forecasting. They're just sample size opinion of one, and my opinion might change tomorrow with news. I didn't have the news 2 days ago with what happened with the Bitcoin drops due to certain macroeconomic news and geopolitical tension. So that's what that's what it is. In the other instruments, they have hedging instruments that have been developed to reduce volatility. So Bitcoin, as you rightly said, is a commodity asset, just like gold and silver. It's not used by the state, stateless, unlike cash, which is. And Bitcoin, because it's got a limited life, 21 million. It's inflation, right? So at the moment, we're just experiencing growing pains. I believe. So it makes it a little bit challenging.
Yeah, agree. There are ways to hedge risk for sure, and there's all these instruments like crypto perpetuals and whatnot to do that. Yeah, but let's bring this closer to home, right? Like, so now Access itself sits on a community treasury of Bitcoin and ETH. So they're held as long-term assets within the Access treasury only because for us, we as a nonprofit, I think there's a lot of sound versus yeah. Where's the mic from? Interesting. Okay. I think it's gone right now. Yeah. Okay. All good. All good. So for an industry association, we approach it from an ecosystem building point of view, and that like if because we hold that native crypto assets, it kind of demonstrates ecosystem participation and credibility and willingness to contribute. So for us, it's a mission alignment argument as it is much a financing decision. So I'm just curious, like, when you think about corporate treasuries and when you think about nonprofit treasuries, is there like an equivalent framing, or like do you think it should be treated very differently depending on the policy?
If we look at use cases, I was thinking about that as well. There are several use cases that are very important, right, for Bitcoin in the beyond our association. So, for example, in the non-profit space, in organizations that are very cash heavy because they're donor, the value of Ethereum is every single transaction is recorded, right? Immutable. It's recorded on the blockchain. It's transparent. It's accountable. And you can stop and you can still, and you can control it in your code. It does exist, right? And then situations in countries where it's volatile, or where there's financial inclusion, crypto can also make sense. Correct. In the corporate sector, depending on the corporates, they would have to change their policy. That would require board approval, and that would require, it would take time. Also requires the treasury budget to be revamped, right? And the forecast of that inject crypto into it, whichever currency or whichever cryptocurrency you talk about, is not that easy. So it's not impossible. So what's going to happen when you see this certain banks, what name diversifying the treasury portfolio with crypto via ETFs and via equity companies that have exposure to crypto. So that's an indirect exposure, and in that manner, it moves step by step towards a diversified portfolio with eventually more donated instruments. I believe institutions don't move fast, but you also see that institutions have now created their own points, which is not a step, right? Because the citizens are backed by and so that's one step, three steps to what's the on-chain.
And when you speak to these like within your community of CFOs and like boards, what do you think are the most common objections that you hear, like when they want to try and implement a digital asset strategy? Like, is it more of unfamiliarity with the asset class, or is it more of like, is this thing for real? Like,
I think education is definitely very much required. It's a lot of misinformation. It's sites like crypto. Look at Bitcoin, you look, but the economics of the instrument and the potential of what can be achieved and the problems that they solve are not properly understood. So that is growing phase. But let's talk about KatKast, your community engagement. So it's not going to be linear, maybe next adoption. But at the moment, there needs to be a lot of education of what decentralized means and what it brings. And I think Ethereum is actually moving to that because it's got ERC 8000, that's plus agent protocol, the paper that they put out. So I think they're trying in their way to educate, but I don't think that's written in layman's terms. But really, I think there is a lack of understanding what decentralized means. It doesn't help that there's been so many lines of scams into crypto. So there's that association. But
yeah. And I think it's like a collective effort to really move and help commit to market education, right? And that's where I find that associations like Access come in handy to convene the industry together around shared shared causes and commitments. In terms of like, yeah, let's talk a little bit about maybe what the industry is doing as a collective. Like, we did work together on the Access IPS investment policy statement. It was developed through multiple review cycles across 2025. It's still undergoing review process before ratification and adoption by the board, but it's kind of rare in an industry to say like, hey, this is what policy in action really looks like within the digital asset treasury space. So we're gonna just deep dive into it a little bit. I think how did you find like the experience of just going through the IPS, like what came out for you, what struck you, as you went through the documentation, because we did say that, okay, we did list some high level criteria. Okay, our risk tolerance is low, and no, we cannot invest in random DeFi protocols and things like that. What's your take around how this is reshaping or can help reshape the or educate the market on?
I think
I
the
think the
IPS has been very well
well
through.
through.
It's comprehensive
And
and yet
yet
concise.
concise.
Right? I know
Right?
the just to
Just to
it,
it,
it
it
has
has
not
not
gone
gone
into
into
undue
undue
detail.
detail.
And I
And I
think
think
that's
that's
where
where that
the policy execution piece comes in with the money detail. The IPS for me is like overarching guideline with best practice standards set in play, and that can be reviewed practically by the board to make tweaks and refinements and adjustments that then can be articulated at a detail level in the execution document that the work that we're doing together, which I'm so sorry, I've been terribly
okay.
Anyway, I apologize. I'll be better. So that piece of work will have more nuts and bolts, right? To substantiate from the backbone of the idea. And I think the IPS, there's no even to reviewing it. The space is so rapid. The changes that are happening, would warrant the IPS looked over. And I think will come out from the implementation via the paper. And the key really of this, my experience has been that the feedback has to be very clear and very fast, and we try to build contingency in play in that initiative. And then that's my view. I think it's,
I was gonna say that if we had to kind of just continue continually engage the industry, right? As we kind of build this out in the open. The way Access did it was initially we wanted to kind of appoint a custodian, so we went through an RFP process for that, and then BitGo was appointed as the custodian. So that was kind of like one of the building blocks. And then after that, it was okay, what sort of policies we want to put in place? Who do we want to appoint as multi-signatories, things like that, key management. What do you think? Say if a CFO of putting ourselves in the shoes of a CFO, for example, who wants to kind of roll out a digital asset strategy, like how do you think this CFO should approach a digital asset treasury rollout? Yeah, like if you had 12 months to kind of rebalance.
I think license entities in Singapore and financial services are quite lucky because MAS has been very proficient in publishing guidelines and updates and notices and revisions of the guidelines. And so one of the things the CFO at the end of the day would be the execution, right? So a lot happens at the board level, at the tax management and the board level. The execution part for the CFO, the framework under which the implementation is important. So technology management, entire assessment to be implemented, vigilant. Then the audit of the new Treasury inflow should occur, because this is digital, pen test and more pen. If we are talking Netflix, right? It's doing lots and lots of pen tests. Security funds in Treasury, right? Previously, the Treasury faced the volatility in terms of currency movements. In digital, I feel so visceral. Is the cybersecurity aspect of key, because the loss can occur from cyber breach alone, right? So the CT becomes the forefront, DCM comes to the forefront, incident response comes to the forefront. All of this have to be in place before even start to do step one. And this is very different from traditional Treasury.
Yeah, you're right. Because it's like all the security concerns. It opens up a whole new level of like technology risk management.
The way the logical mind is for the work,
Right. Because I was thinking like from an accounting perspective, I mean the FASB has released standards on how you do fair value accounting for crypto assets, but like it's not just a snapshot on a balance sheet, right? When it comes to managing digital assets.
So that I saw your point, and you raised such a point that the issue with mark-to-market valuation on balance, it's going to create a lot of volatility in the balance.
Yeah.
So the noisy accounts are going to be healthy, because there's going to be variation here, and not necessarily adverse variation, because mark-to-market. It happened in liquidity. A lot of if the went wound, wouldn't incur the volatility, right? So in this case, again, the accounting practice with what we're seeing in the nascent stages of adoption of digital currency, which I looked at the graph, it's going to create a lot of movement in the balance sheet.
Yeah, you're right.
And not necessarily movement that's going to be realized.
Yeah, exactly.
So that on the practical aspect. So a lot more work. This is where AI comes from, right? I think.
Yeah.
As being useful.
Yeah, it will help with the workflow automation for sure. Yeah. I was gonna say that in Singapore, like regulatory clarity also plays a very important role. So we have the Payment Services Act, we have Project Guardian on tokenized wholesale assets, stablecoin regulatory frameworks, the initiatives like Project Bloom, which you shared in one of our working groups. Like how do you see MES's stance? To me, it comes across as progressive, shaping
at the institutional level.
Yeah, at the institutional level, how do you see them shaping Treasury governance and in relation to what you've seen in, say, US or Europe? Yeah.
US and Europe are at stark differences. Right. So US have acts, and they are, I believe, slightly more bullish, right, in the adoption. GNS Act deals with stablecoins and reserves, and then the Treasury Act sort of clarifies, who has regulatory oversight, right? The European media and ECB has slightly different, and that lends towards their culture. Europe's always more long term.
Mm.
The euro dollar with the stability pact, and I see what I see their stance reflecting that, right? So they have long-term structural considerations in mind for the monetary system, right? And they still bang on about it's got to be uniform value, right? It's got to be elastic, so the liquidity has to sustain stress test, and then it has to be integrity, right? So it must be able to be supervised reliably, consistently, and then must be protection mechanisms in place. So in Europe, a lot of it also is because it's civil law. So the regime is different. So just want to say, during the GFC, when there was a lot of turmoil, following which I did my PhD research, and it was in how can different family of law help prevent crises, financial crises, from their differences in approach in governance. And I'm seeing it coming back full circle again. And I think Europe in the civil law regime has always been secure in governance because there's been volatile crises. And I think that's happening again. So MAS in Singapore has always, I felt, since my return here, has been very clever, has been very progressive, and MAS is acutely concerned about protecting retail, right, and Singaporean. And I see their positioning and progress. I think it was Orchid, right? And then Guardian. And that's tokenization, and Doom is also tokenization and settlements. I think they have another one, project something else.
Global layer 1, I think.
That's more crypto.
Okay.
I can't remember one, so sorry. I didn't write it down.
It's okay.
Because Orchid, Guardian, Bloom, it's one piece, and then there's the other piece that they have that looks more at crypto.
Was it the first one?
Sorry?
Was it the first one, Ubin?
No, that's CBDC. I remember CBDC.
Yeah.
But in my view, MAS is very systematic in a very considered manner. At an institutional level, it's I believe been quite diligent with banks, right? And I've spoken with some of the participants in the office, and they are very thoughtful bankers, right? And thoughtful technologists, So I think Singapore will actually come out implementing this a lot sooner than many other countries in the region. I believe we are more in a smoother fashion, right?
Okay. There's a lot of optimism here, and fresh off consensus Hong Kong even. And every country has their own form of either digital assets regime and debating
because the reserves are different, the GDP is different, Singapore's quite fortunate to be well positioned to be the test bed.
And Singapore is also well positioned with its own strategic reserve.
Yes.
I was gonna say, in terms of the recent of Ripple's acquisition of Treasury, it signals infrastructure convergence, and the idea is treating digital asset custodians as digital banks within the same treasury management system, and it tracks traditional banks. So everything like your balances, transactions, market positions across Bitcoin, ETH, stable coins, all feed into the same workflows within the same management fiat cash. So what do you think it means for treasury teams that kind of historically just manage very separate systems, right?
So if we break it down, the pros and cons, Right. So one of the big benefits is in the settlement, the clarity in settlements, the pricing, and the certainty of settlements. In the older systems, when we work with a time zone, there's always going to be some uncertainty with settlement date and time.
Yeah.
Value, right? These are for money market assets in the public domain that gets repriced, right? So this solves that problem, right? So it's great, right? So that's one thing, and it means that both sides can close the book and clear it, keep the transaction sooner and more predictably, right? And it's on everything. Then I like the fact that it's a closed loop in the sense of the word, because it's vertically integrated. But as I mentioned earlier, there is a risk of comparison as well, because it's now concentrated.
Yeah.
The more poignant factor is hidden in the loop if there's a lot of information. Right. The ability to spot mistakes and remedy that. So then, to your point, it's really about upskilling. Right. Traditional finance routines, they're good at knowing treasury instruments. Now there's a lot of tech coming into it. Right. And the builders of this tech are all technologists. So I was actually speaking to people the other day, fantastic security technologists who build this for the Web3 right? Incredible, very proactive, very progressive, very aware of all the breaches and attacks that happen. But they didn't have the background in financial management, right? Or the legal side. So what I took away from that was, that's great. You built a system. Worst case scenario, it's false positive. So false positives are all the threat is based on an that's false positive. But the risk really, for me, in my view, is false negative. What if they fall through the crack? Unaware. So that's where I think at a high level, what's and the positioning and how Ripple has sort of progressed is something that is needed, but we as a community should be aware of potential risks as well.
Yeah, because at the end of the day, it comes down to the humans executing the technology itself. And so that's why, when we talk about governance controls in place, we that's where custodians play an important part in the ecosystem. And so within Access, we have a 2 out of 3 multi-sig, and for larger corporates with to go to qualified custodians like BitGo, licensed in Singapore, they can kind of take on some of that key management responsibility. But although I'm not sure about the insurance coverage part, we were debating that in our working group. So I'm just curious to know, Jacqueline, what's the decision framework for institutions in choosing between self-custody, a qualified custodian? Yeah, is it leaning towards okay, let's just appoint someone, or doing everything in house, or hybrid,
So I don't have a data point for you. So some of it is anecdotal, the other conjecture based on safety. So I caveat that. I believe the manner of the really depends on many factors, not just right. It's not a preference of what is best practice. There are many constraints. So skill is one. In-house research is another. But I think one of the is risk skill, right? If you have somebody handling a multi-token wallet, cold wallet, who does not understand how to use it correctly, there you have it, where the loss is immediate, right? You can't retrieve. So that's where then a third-party custodian makes sense. But as you know, with MES guidelines, there's a third-party risk management whole framework. You now, in the finance world, have what we call counterparty work, which is the custodian. Right. So that comes into play too. And then you have the hybrid model, which has benefit and cons on both sides. So at the end of the day, it's a policy stance. It needs to be carefully thought and decided upon as an organization. So it differs with each organization depending on what are the biggest pain points, where they're at, what's their resourcing, and what are their capabilities, and how they execute this policy, right? Under the GRC, governance, risk, and compliance framework. And then obviously also what's required of them under regulation, legislation, and that's changing, right? So that's the other part. For me, if I was in a position to make a decision on behalf of an organization, I would say cold wallet.
I'm sorry, you would say what?
Cold wallet multi-sig.
Yeah. Cool wallet multi-sig. I think like I think you answered that question because I had a question about what about smaller firms like SMEs that want to set up their own. They can't afford like a full scale like end-to-end management treasury management platform, but they just want to try and get a operational stack up and going, and to do it in a safe way. Yeah. So I agree with you that multi-sig approach with the cold wallet would work. Yeah.
But for smaller organizations, they might prefer to select licensed entities, right? And licensed entities within their jurisdiction, I would recommend. And then from there drill down with regards to custody. That is a tricky one. Because a cold wallet in the hands of a human that does not practice the high security standards is higher risk than with a knowledgeable third-party custodian.
Yeah, and the insurance too. Like honestly, even as a working group, we have an insurer that does structure these sort of products. Rob, I think it was, but even so, it's a very niche thing.
Yes.
Yeah,
and they price based on data points that they get, right? So I'll be interested to see how they price that topic this now. Actually, let's do that, Catherine. Let's go and see how the practicing the policies have been revised or not.
Yeah, we should. Yeah, Rob did give a few comments. And I was asked to trim down the statement drastically. So I think I trimmed it down to 20 pages from like 40 pages, but I think it needs to be trimmed down even more.
One thing you could do perhaps is
oops. I think there was a bit of cutoff.
It's okay.
You're back.
One thing we could perhaps think about is add some of those pages as a supplement to the main ideas.
Oh, sorry, add which one?
Some of the additional pages that you bring back as a supplement and an annex.
Oh, yeah, it's got to go.
Because at some point in time, if we're looking at scenarios and contingency planning, you never know what you need those pieces of information.
Yeah. Okay, we'll call it annex. We'll annex the rest. Yeah. I haven't deleted it yet. Yeah. I was gonna say, okay, so we're in the last 10 minutes. Yeah, and I know who knew that Treasury governance could be so exciting. Okay. I was gonna say So we covered three themes in across the conversation today. The first one, we have, yes, a strategic use case for allocation of digital assets to treasury management. So you have MicroStrategy, Meta Planet, sovereigns, sovereign reserve discussions, even the excess treasury. So it's not about whether digital assets belong in treasury. The question is how. And the second one is policy scaffolding, with the right policy documentation, and as we discussed, like organizations that begin the process now will be ready when the market matures. So thirdly is operational infrastructure. So you have acquisitions going on with Ripple Treasury. We have tokenized money market funds, even staking tools existing, custodians that are licensed. So it's really more on governance maturity, building the tech and tool, closing the tech and tooling gap to increase institutional confidence. So, Jacqueline, what's your one piece of advice you want to give to a CFO who's like kind of like crypto curious, genuinely interested, but kind of like sitting on a fence? Where should this person go to like learn and yeah, what and learn more and get more resources? Yeah.
Come to access. Shameless plug. Come see Katherine and I.
Yeah.
Yeah. No, I'm not kidding. I just there are so many resources available now.
Yeah.
Depending on and catered to different levels, and that's brilliant, right? The books galore. And I see Universe having programs, and the instructors are, I've met some of them. They are, I believe there's one instructor for every segment of society, right? Because they're so different in their approaches, the way they play. So to see it all, depending on what their background and their base knowledge is, God skills future, get a grant. There are all these programs, select one. But before anything is done, right, very critical in this space is collaboration. It's no longer a CFO doing, what the CFO did. You've got to be the tech guys, right? And you've got to make sure you're up to speed with regulation. Not just the SFA regulations, not just the finance regulations, but the PA, the security regulation, the whatever's happening in AI, in the CSA. AML, KYC now very different. Right? They need to understand. This is for a fund asset management or they need to understand KYC, AML, fake. How do you differentiate? And transaction monitoring is different as well. So when a treasury just the trading, the CFO needs to understand, right? When is the trade completed? What was a valid trade? There's so many aspects. It's like learning an entire capital markets, financial institutions, management, like a whole bunch of books. But it's very interesting. It's very interesting. That way you justify it. And then you try experience built in the additional guidelines and the control and have best-in-class practices, governance frameworks, right? The people there. So the frameworks approved top-down, because very much hand-in-hand is the business continuity plan, the incident response plan that I can't emphasize enough. And that is something completely different from the traditional countries. This is now a key component to safeguarding the treasury properly in the right? And transparency.
Yeah, transparency and open collaboration. I think definitely digital asset treasury governance is no longer just a crypto story specific to crypto audiences. It is a wider collective. It's a fiduciary story, and governance professionals, fiduciaries who built this kind of framework together now is preparing the right processes in place and frameworks in place when their boards will ask the question like, what plans do we have in place, right, to be ahead of this curve.
And it has to be
So
dynamic, not static.
Yes, exactly. Yeah, and that's why the feedback loop needs to be continuous. So, Jacqueline, thank you so much.
Thank you for having me, Catherine.
Yeah, it's a really, really good discussion, and I really enjoy the energy you bring to the Access community. So, thank you so much
You're
for
very kind.
taking the
You
time.
do all the heavy lifting, Catherine. Honestly, we're very, very lucky to have you in Access. And thank you for inviting me during this time to geek out.
Yeah, geek out to governance.
Hopefully, we address the right audience and they would be engaged and will come back and listen to this channel.
Yes, it's gonna be published to YouTube and LinkedIn and X. Yeah, so we're gonna do a few quick real edits post production as well. So stay tuned for that.
Thank you.
Okay, thank you, Jacqueline. I'm gonna end the stream right now, so I'll catch you again in the studio. Thank you.
Bye-bye.
Bye. Okay. End stream.